Hi guys, it's Chris Baynes at Coldwell Banker Seacoast Realty. Hope you're doing well. Wanted to touch base with you on our January MLS real estate report. This is where we talk a little bit about the numbers for the past month and what they mean to you and me in our area. Basically what we'll do is we'll look at, and you can see on my blog down here below, you can see the chart. Want to talk about a couple of things there. One is December to January of this past year. December of 2011 versus January 2012. Look at those numbers. They look kind of scary at first. When you see almost 30% reduction in the average sales price, 36% reduction in total sales dollars, and a super huge increase in new listings, 44% increase in listings in 1 month. Wow, what in the world's going on here? Well, that is your seasonality effect. So don't want you to get too alarmed about that. That's what we typically see. We see a lot more activity in December than we're going to see in January. The holidays are coming. People were trying to close it around November, close before the holidays. So a lot of people did. They got into their homes right after Thanksgiving or right there before Christmas. That added to the December sales data. And then in January, everybody's like, whew, the holidays are over. Let's take a little break here. They're going to reset. They're going to put their houses off the market. Some people took their properties off the market in December. Even in November, they would take their properties off the market because they didn't want to deal with it during the holidays. And then a lot of times they would put them back on in January. We're going to see people have their houses go back on the market over the next coming months. So it's something to keep in mind when you're looking at data like this right here. The thing that I want you to pay attention to is January of 2011 versus January of 2012. These are the long-term plans and long-term statistics that I want you to keep an eye on. That's what we keep an eye on. You can't tell anything from 1 week to the next, from 1 month to the next, but you can when you're comparing year-ago data and you look at longer periods of time. That's really where you're going to start to form a clear picture of what's happening in the market. So when we take a look at it, we're looking at average units sold down 7% in 1 year. Well, hey, you know what? We've been in a declining market since 2007, really around here. 2006 numbers, 2007 and 8, as far as prices and values go. We've been declining, but if you consider that in 1 whole year, we've only made a general adjustment of 7% compared to previous years where we've seen upwards of 10%, 15% in some cases. That's pretty substantial. It's not substantial is what I'm saying. Less than 7% is not a bad number there, considering most of that occurred in the first part of the year. Towards the end of the year, we saw almost no adjustment in sales price. The other thing we want to keep in mind is your average sales price only changed 1%, down 4%. It's huge. Total dollars down 7%, and days on the market up a little bit, taking a little bit longer to sell some of the houses that are out there as opposed to a year ago. No big surprise there. Not a huge number. Something worth keeping an eye on, though. New listings up 10%. That's pretty much normal. So a lot of people now are seeing the writing on the wall. I think you're going to see a whole lot of market shifting going on now because things are changing. We're seeing buyers coming off the fence. We're seeing lots of multiple offer situations. We're seeing the foreclosures that will still be coming on the market. We still have foreclosures. We're seeing multiple offers on those, and we're seeing the banks pricing those properties below market value, well below market value, getting multiple offers and selling them above market value. I don't see many resale equity sellers doing that sort of thing, but we do see the banks doing that. So if you're bidding on a foreclosure, bid according to the market value. Have your agent prepare a market analysis so that you know the right amount to offer, because just because it's a steal doesn't mean they're going to sell it for that. You may find yourself missing out on opportunities. Investors are well aware of this at this point. So what do we have coming up this year? Still more foreclosures are going to be coming out. There's still the shadow inventory out there. It's not going to be dumped on the market. They're going to trickle out. People are buying them up. Interest rates are low. Money is cheap. I will put up a little example a little bit later on about the difference in affordability of a home if you're buying it at 4% or 4.25% as opposed to 5.5% or 6%. Your affordability goes way down, so it's certainly worth keeping in mind. Anyway, have a great week and give us a call if you have any questions. Take care and thanks for visiting our site.